My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey there, ladies and gentlemen. Today we have a special guest zooming in from beautiful Florida. Kevin Shortle is a very experienced real estate entrepreneur. He specializes in notes. He's been in the business for a long time. He's also a best-selling author. He's a trainer. He's a speaker. He's a podcast host. He's a busy guy. Kevin, welcome to the show.
Hey, thanks, Dave. I appreciate it very much.
All right, Kevin. Well, give us a little snapshot of what real estate investing looks like for Kevin Shortle as of the middle of the year 2025. What are you up to?
Well, I've been investing really solidly in notes for quite some time. You know, I've been down the road of being a landlord, of lending money, of fixing up properties and reselling them. And everything kept pointing me back to go what you started doing 30 years ago. And that was buying debt on the property. So, you know, I don't buy the real estate itself, hence my book title being Real Estate Without Renters. I don't own the real estate. I act more like the bank. You know, so instead of somebody making a payment to a bank on a mortgage, they pay me. And that way I don't have all of the typical, headaches, if you will, of owning property, the liability and the responsibilities and everything else that comes with it. So it's a great way to be a passive investor in the real estate side of things.
So, Kevin, I'm going to zoom out for a second, and forgive me for asking really simple questions, but I just want to make sure everybody understands what it is that you do. So what is your definition of a note?
So a note is a promissory note, right? It's an IOU. So when somebody borrows money to buy a home, they have to promise to pay it back, and that promise has to be in writing. So that's what a note is. And we really don't buy just notes, though, because a smart investor who just buys on I'm buying on this promise, even though it's in writing, I want some collateral. I want something of value in case you don't pay me. So we buy a note that is secured by a mortgage. So that security says, if I don't pay you back, then you have the right to foreclose on the property. So every investment I do is backed by something that's of greater value than I have into the investment.
So dumb question. What is the difference between a note and a mortgage?
So again, the note's just the promise to pay back. It talks about the terms, the interest rate that you're going to pay, where you send the payments, what the monthly payment is, everything about the loan. Then to get that loan, you also have to sign the security agreement. So we can call a mortgage a security agreement. And that's the one that says, if I don't pay you back according to that note that I signed, then you have the right to go after the property through foreclosure.
So are not most mortgages kind of a combination? It's one document that kind of takes care of both of that, or are they
in the States? No, in the States we have two documents, two distinct documents. And what's interesting about it, if you were to go on public records, which I do on a daily basis, right? When I'm doing my due diligence, looking at these notes and doing my research, which is all just done through the internet, I can't see the note on there. I can only see the security agreement. Because what's interesting is in the United States, we consider the note portion a personal document, not a real estate document. So real estate documents attach to the property. So the mortgage is the one that actually attaches to the property, and therefore it's a part of real property records. Real property records are recorded. And you can look those up typically through online purposes today. So we do have two separate, distinct documents that we're purchasing there. Yeah.
All right, very good. So if I understand correctly, you probably can't have a mortgage or a security document without a note, but you could have a note without the security behind it. Security.
Yeah, especially in the seller financed world. So although I do buy bank loans, banks only sell loans if they're under a category of non-performing.
Okay.
Right. So non-performing loans.
People aren't paid on them. Right.
Exactly. And I'll tell you what, there's a lot of money to be made in that. And the last crash was incredible. We had close to 10 million people facing foreclosure in the States. And government tried to fix it, didn't work. Wall Street tried to jump in, didn't work. And it really came down to individual note investors like myself who would buy a non-performing note that was originated from a bank, and then work with that borrower to get them paying again. And we were able to do that because we bought them at such great discounts, So there's different calibers of notes. You can think of grading a note. When I'm reviewing a note, is it an A quality note or an F quality note?
Yeah.
So there's a grading process. And of course, my investment is going to be higher or lower based upon the overall risk that I assess in that note. So a lot more notes today. You mentioned about June and 2025. A lot of the inventory that I'm looking at today is one of two things. It's either a new note that was created by a real estate investor and now they're looking to sell the note, or it's a note that somebody's owned for 10, 15 years, a seasoned note, and they're looking to sell that, both of which are good opportunities. You can buy what I like to call a Dave boring notes, which are fantastic. It's a kind of note that you want because you buy it and it just pays you every single month and you don't do another thing. You don't hear from anybody. You have a servicing company collecting the payments for you. I don't deal directly with borrowers. Nobody wants to do that.
Yeah.
So those notes, what we see a lot of today is, and I'll just use simple numbers. You've got a house that's worth about, and these are very realistic, by the way, worth about $150,000, and the person might only owe $40,000 on the property. And we end up buying that note at, say, $32,000. So our $32,000 investment's backed by a $150,000 property. So again, if things go bad, we're safe.
Mhm.
And because I'm buying it at a discount, I'm discounting it so that I can increase my annualized return. So the typical returns right now in buying a note, like I just described, is between 10 and 12%. That's
Mhm.
basically what we're buying there. So we're buying a passive income stream, paying us every single month. We don't own the property. Don't call me about the leaky roof and all that sort of stuff. I just get the monthly cash flow, and it's secured by the property, and I'm making 10 to 12%. Now, if the loan pays off, I also get what we call bonus yield because they owed 40,000 in my example. I only paid 32 for that. So there's
Right.
going to be a gap that stays for a long period of time over that duration of the loan. So those are really, really nice notes, and I buy those on a very regular basis and teach my clients, how to do the same thing because the inventory is plentiful. That's the thing. It's not one of those industries where we have too many people chasing too few deals. I see that a lot in traditional real estate. People trying to find that motivated seller who owns a piece of real estate. And gosh, I hear some of these real estate experts talking about looking at 100 properties to identify 10 to buy and end up buying one. I'm like, my God, that sounds like a lot of work.
It is. Yeah, I've
I
been in
can
I've been in that
spend
business. I think you were back in the day as well. So yeah, we know what
I
that's
can
like.
spend 10, 15 minutes. Well, I'll know, I can look at a note and let you know in 5 minutes if I'm interested in it. If I'm interested, it's going to take me maybe another 10, 15 minutes worth of research, and I'll let you know if I'm good. But we just have plenty of inventory like that. The other inventory that we see is real estate investors. So a lot of real estate investors have figured out if they buy a property and they fix it up and resell it, you can sell it quicker and typically at a better price if you offer seller financing, where somebody
Mm.
doesn't have to go to a bank.
Right.
There's this gap of a so-called affordable housing in many states in the United States because banks are not interested in writing $80,000, $90,000 loans. They can't with our rules and
Especially in
laws
rural
that we have,
rural
they can't
areas and
do it.
whatnot as
Yeah,
well.
they
Right.
just they can't do it.
Mhm.
These investors, real estate investors, provide the property, they sell it with seller financing. Now, sometimes there's an underlying loan, like if they borrowed money to buy the house, there's still a
Right.
loan on there and they do a wrap, we can buy those. Or maybe they owned it free and clear and they offered seller financing. Well, eventually the real estate investor wants to cash out of that note and get another deal.
Right.
That's where they come to me, and they say, hey, we've got this note. So I'll look at the note and say, was this person underwritten? Did you
Mhm.
qualify them for through anything? What's their track record? Have they started making payments? Show me the payment history on this. Let me see the paperwork. Did you paper it
Yeah.
up the right way? Is everything recorded the right way? So I just go back, and that's what I like versus lending because I used to do lending too, but lending, it's like real estate in the fact that you're always chasing, the next deal and turning your money. Where this, I'll examine, hey, what did you create? Let me look at that. Let me grade that note again and come up with an offer on there, negotiate the terms, and I might have a cash flow that pays me for the next 20 years.
So what I got two questions popping in my mind here, Kevin.
Mhm.
Number one is typically where are you finding these notes? Are they
Yeah,
most like if you had to divvy them up percentage wise, like individual property owners versus flippers that are doing owner financing versus bank owned notes, where do the majority of your notes come from that you buy?
sure. We have a trading platform for one. That's probably the easiest place to find notes. I actually trained the guys who created the platform. By the way, I trained them about 15 years ago in the business, and it's called PaperStack. And anybody can go online there to sell a note. Anybody can go online there to buy a note, and it provides a nice, place where people can communicate, buyers and sellers get together and trade notes. We do a lot through that. The other notes come through various big buyers, and these are companies that will buy in bulk, like our our secondary market in mortgages in the States. So we have a different system than Canada, and I actually teach Canadians how to do this in the States too, by the way.
Yeah.
Um, we have government entities like Fannie Mae, as we call it, Federal National Mortgage Association, that sort of thing, and they actually own 98% of the loans in the United States. The mortgages don't do that. The mortgages originate a loan. Sorry, the banks originate a loan, and then they sell them off to these government entities. And when those government entities don't get paid, they sell them off in bulk. So you might have to go to a sale and bring, $50 million to buy a bulk set of notes, non-performing notes from a bank. So the big companies will come in and do that. Those big companies then will sell some of those notes right away. They paid a nickel, a sell for a dime sort of concept, but they'll also work out some of those loans themselves. Our goal is not to foreclose on people.
Mhm.
It's not what we do. We're actually just the opposite. I'd rather get that loan reworking, get them to pay again. And I can do that because if I buy the loan so cheap, I can modify that loan and I'm still, financially gaining on the
Yeah.
thing. So it's really a great service that we provide from that because the banks at some point, they just give up on the person, and then we come in and say, well, let's see what we can do.
So again, what percentage do you think come that way versus the online marketplace that you work with?
Oh boy, I would probably say it's almost split.
Really?
I look, I constantly look at all sources. That's the thing, and I'm not really just dependent upon one source. There's a number of companies that do that, and quite frankly, longevity plays a role in my particular case because I've just trained so many of these people, and in this industry, probably more than anybody in the United States. I've trained people and. Some people will come back. I had a guy in California retire and he goes, hey, I want to sell half of my portfolio. He comes to me, he goes, I got 12 notes, I want to sell. I've got another guy who's bringing me 5 notes next week from Arizona, and so that sort of thing kind of happens too. If you're new to the business, obviously you're not going to have that. But the point is, you would start to build relationships like that. If
Yeah.
you are in real estate and you know people who are creating paper, like I said before, like a real estate investor who's doing that, well, build a relationship. They might be doing 6 houses a year. Well, that's 6 notes right there,
Yeah.
and meet
That's all
somebody else, and they
all
might.
some guys need for sure.
Yeah, you know what I mean? And that's so you can start to build those relationships. Our industry has conventions. And in fact, I just attended one in Tennessee. Um, and that's actually run and owned by a Canadian. He's up in your part of the country up there. But he runs it down in the States and invests down here. So that's another great place. You go and you meet other people who are in the business and it's a relatively it's a huge industry. I mean, we're talking a multi-billion dollar industry, and it's impossible for the number of people in it to buy every note that's out there. We just don't
Yeah.
have enough people. So it's still kind of a hidden niche of real estate. But ironically enough, every piece of real estate that has been financed involves a note and a mortgage.
Yeah. Yeah.
So it's
No.
really a big part of that, and
Well, the other question that kind of popped
yeah.
into my mind here, Kevin, was so you mentioned, you're buying notes off the platform, I would imagine, or you're buying notes off of people that you know.
Hmm.
I would imagine those are performing notes.
Mhm.
And then the ones that the big guys are buying and then selling off piecemeal, sounds like those are non-performing notes. Is that correct? So how
Correct.
much
So,
work is involved for you to get those non-performing notes back on track?
okay. So getting a non-performing note reperforming normally starts with some kind of legal action. And what happens is psychologically, a delinquent borrower doesn't want to hear from anybody. They have a
Yeah.
tendency to not answer the phone and just not communicate. And that's the worst thing they can do, really. So we try initially to send some letters to open that window of communication, but a lot of times it takes the threat of foreclosure. So I have had to threaten people with foreclosure, but really what I'm trying to do is say, talk to us. There's a lot of things that we can do. So sometimes we might, and what you do is you outsource this really to a third party. So you're the director. You just tell your workout company, hey, here's what I would like to do. Let's offer them a forbearance because we'll know going in like, hey, they haven't made a payment in 2 years. And they've built up this arrearage account of $20,000. We can accelerate that loan and demand payment in full, right? But instead, let's take that 20,000 and tell them, look, we'll put that to the end of the loan. Let's just move that here. We're not going to accelerate on you. Just start making your payments again. Or maybe they just need to temporarily to lower their payment $100 a month for the next, year or something like that. So it's a combination of, we can stretch out a loan, we can lower interest, we can do the forbearances. Really, we can do all sorts of things to get them back on track. We just have to figure out where they are, what they can do. There have been times, of course, where people you look at and it's just like you really just can't afford it.
Mm.
And look, life happens, right? So you might have had a husband who passed away and left a wife and she doesn't work, because the breadwinner is gone and you want to help those people as much as you can, but at the end of the day, if they can't afford it, you're almost, it's better for them in the long run. It's time to move on.
Yeah.
If there's equity in the property, sell it to pay off the debt. Don't let it go into foreclosure. Don't do that. Sell it, move on, move back in, or do what you need to do to move on with your life. And things like that do happen. And a part of this to master this business, I tell people all the time, is that's why it's important where you have to understand the numbers and the story.
Mm.
It's important to know both. And the more you know
So are you
going
able to
in,
get those stories if you're using a third party guy to kind of do that side for you, or do you
yeah, if
like
we're
how do you
buying a
find out
non
this?
if we're buying a non-performing loan, we'll see what's happened. When was the last time they paid? And if the note has been professionally serviced, there'll actually be notes that we can read. What
Oh
were they
yeah,
communicating back and forth with? I lost my job. I should be working again soon, that sort of thing. So you
right.
find indicators. So that way you're armed when you go in. You have a plan A, B, C, and D all work out financially for you. But sometimes you just don't know which one it's going to land on because you haven't spoken with the borrower just yet. And we did a lot. I mean, the inventory's completely switched in our industry. We probably had 90% non-performing back when we had the real estate crash in the States. And now maybe it's 90% performing notes
Interesting.
only and
Okay.
10 only about 10% on the not performing. So, I look at it where the markets, what's going on in the overall economy and that sort of stuff, and all the politics and all this stuff, it's all noise. I've been doing this through, I don't know, since Ronald Reagan was president. So Democrat, Republican, it's like it doesn't matter because that doesn't dictate our marketplace. It's our strategies within it. I
Yeah.
have shifted from performing, not performing, and now we're even seeing home equity lines of credit, that people get where they're borrowing against their house. We're starting to buy those up. So the inventory shifts a little bit, but most of what we see really today is performing notes, which I love.
What would
That's
you
the
say is the
fastest part
average
of the business.
duration of a note? You've done hundreds of these.
Mhm.
Like, I mean, they might have a 20-year term or something like that, but statistically speaking, people move every whatever 7 years kind of thing. So
11 now,
what's
yeah.
is it 11 now?
Yeah, at
Okay.
least here, yeah, yeah.
Yeah. So what's the average duration of one of these notes for you?
The originating term on the loan, yes, we're going to see loans that were created for 30 years. That's a typical mortgage in the States, 240 months. And a lot of these might be seasoned. So we might see a loan that was 240 months, but now they only owe 200 payments left. And some investors get a little scared off on that where they go, well, I don't know if I want to have my money locked up, or I don't know if I want to wait that long. And the whole thing is, you don't have to. You can buy a note that has 200 payments left on it, and maybe 5 years down the road, you say, I want to sell it. Well, sell
Mhm.
it. Put it on the platform, price it well, it'll be gone in 30 days. So there's a liquidity in our marketplace, and I know we're limited on some time, but with this business also, there's a very, very, very powerful technique called a partial. So if we own 200 payments and we're getting paid every single month, if you look at that and visualize that as an income stream, I can go ahead maybe 2 years from now and go, you know what? I want to sell just 5 years of the 200. I want to sell 60 months of the 200 payments that I've coming to me to somebody else. So I'll get a lump sum. They get the payments for the next 60 months, and then I start getting the payments.
I didn't know that. That's cool.
And if you have it structured the right way, I can show people how to buy a note, let's say for 30 grand, sell half of that note for 30 grand to another investor, and you get all your money back. You own the back half of that note for free.
Yeah. Just have to
That's
delete
when it becomes
gratification.
powerful. So that's when that 10 to 12% return I told you really starts to dramatically change. That's just if we buy it and hold it. If we get creative and sell partials and splits and all these sorts of things, get creative, then the returns get phenomenal.
Fantastic. All right, Kevin, I'm sure lots of people are going to want to connect with you and find out more. Where should they go?
Yeah, just go to my website, kevinshortle.com, and the spelling on that is TLE, by the way. So it's KEVINSHORTLE.com. And I'll have email addresses and everything there. And in fact, you can send me an email if you want. It's another tricky one, Kevin at kevinshortle.com. Shoot me an email and I can send you a Calendly link. We can get on the phone for 30 minutes and talk about it, see if it's something that you're interested in. Because I do personal consulting with people on this. And I even partner with some people. I put my own money in with them. And so my people really get good results. Yeah, I work with at a high level. I spend my days on Zoom like this, Dave, just working with people through every aspect of these deals.
Awesome. Kevin, thanks so much for being on the show.
You bet. I appreciate it.
All right, everybody, take care. We will see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.